From Jamie Dimon to Warren Buffett to Ray Dalio, more and more financial experts are saying, yes, we could have a recession in the United States and the Western world later this year. It may be soft, but it will bring some pain. And I'm here to tell you, you can sit out the next recession if you do one thing. People have this idea that there's a recession coming and you just have to sit here and take it. And what I've been telling you for years is, if you have a business, you need to be diversified. Among other things, diversified geographically. Do you have customers just in one place? So that if there's a recession in the US and unemployment goes up and some companies start going under, are you going to have other customers in other parts of the world where their business is going just fine? We saw during the recent bank failures in the US, banks in Europe and the US, their stocks tanked in some cases. In Asia, they basically yawned it off. And it shows that being geographically diversified means when bad things happen in one part of the world, they may not happen in other parts of the world. Some more mild recessions may hit one country or one region worse than others. And I'm going to tell you where you can not only do business and where you can pivot to in your business, but where you can also be investing to basically avoid the recession. Because I came across this interesting graph recently about what the projections are for 2023 GDP growth. And so if you look at this graph I came across, you see countries like Germany, for example, actually expected to contract by a small amount this year, 0.3%. Growth is not much better. Nominal growth in countries like Brazil, the US, South Africa, all around 1%. So you're not really seeing a lot of economic growth there as people are concerned about very tepid economy. But then start to look at other countries, the ones that we've talked about that may not be entirely investable yet, like in Nigeria, they're going to grow 3%. Thailand, 3.7%. Now look at the Asia frontier markets. Their average is 4%. We've told you for years about Georgia. And if you would have gotten into the Georgian lari at some point, for example, in the last couple of years, you'd have a really big gain against your US dollars on the currency appreciation, all while earning some of the highest bank interest rates in the world. If you had bought property in Georgia a couple of years ago, you could be selling that property for a huge gain right now. Things in Georgia are going through the roof. And I'm not saying that will continue. By the way, so did the Georgian bank stocks. They had an incredible start to 2023. But that's just the beginning of the Asian frontier markets. Look at Kazakhstan, Uzbekistan, the Stans, Mongolia. Those are all climbing up to 5%. Then countries like Indonesia, where I've invested personally and gotten some pretty good returns. It's harder to invest there directly, but there are things like funds you can buy. Let's say you have a bank account in Singapore, you'll have access to some of those funds. More locally focused funds than maybe what you could buy in, let's say, a US stock market where it really doesn't reflect the economy. Philippines, 5%. Again, a harder market to get into, but if you have a focus in Asia with your banking, with your brokerage account, you can get access to that. You're not going to get that through your US bank, you're not going to get it through an international brokerage account, but if you have accounts in Asia, you'll have access to that. And I've got friends who invest in Asia. They have great stock picks. They've done very well with Thailand, Indonesia, Philippines, because those economies are growing. Also look, Bangladesh, Vietnam, and of course one we've talked about for years. One that I started looking at 2007 is Cambodia, where things are probably up 5, 6, 7-fold in many cases in Cambodia. You had a huge run about 10, 11, 12 years ago, and you're seeing continued growth with lots of people from around Asia coming into Cambodia. So that's an example of healthy GDP growth. And if you look at these countries where what's the recession probability worldwide, you look at the UK, 75% chance of a recession. New Zealand and the US not that far behind, 70 and 65. Germany's right there, Italy's right there, Canada, France. Those are all 50% or better chance, according to Bloomberg, of having a recession. But go to the other side, India. Yes, the Indian rupee has gotten beaten up in the last year, but I have been an investor in India. You get higher yield on things like REITs. The stock market, if you're picking stocks there, you could have done very well. 0% chance of recession. That's a growth market. You have now basically the world's largest population. Indonesia, a country we've told you about before, 4th largest population in the world, doesn't get a lot of attention. This is where your Western bias is probably hurting your investments, because you look at a country like Spain, which is close to one or in the top 10 economies in the world. What has Spain done other than just existing that would make it one of the top 10 economies? They have a decent-sized population in Europe. There's not a lot of high-value economic output. It's hardly an efficient country. And they're there basically by default. And what I've told people who, for example, come to Nomad Capitalist Live, did a whole presentation on this, and we'll probably do so again at this year's Nomad Capitalist Live in Kuala Lumpur, the countries that are trying to actually win are the ones where you can invest now and you'll look back later and say, oh, I'm glad I did that. Indonesia, 2% chance of recession. Saudi Arabia, obviously a very tax-friendly place, 5%. China, 12.5%. Brazil, even though there's not a lot of growth, they're saying recession chances are low. Switzerland, one of the few places, obviously a very different kind of animal than in Indonesia or in India. They were one of the few places that had very low inflation in recent years. And Spain even. Oh my goodness, how are they escaping anything? Mexico. There's been some great stock picks in the banking sector, for example, in Mexico. And so you can invest in these places and you can take advantage. Look at this map of Europe. You're seeing the biggest growth in some of the more emerging markets like Romania, Bulgaria, Turkey. Also Ireland, really doing very well is by Western European standards. But what have we been telling you for years? You do not have to sit through the next Western recession. You have markets that are frontier markets like Cambodia that are relatively uncorrelated. They started at basically nothing, and they have not really had a recession. Maybe you take out 2020 for COVID. A lot of countries had that and suffered there. But other than that, Cambodia has not had a recession in 3 decades. Other economies have huge populations, big fundamentals. They are moving in the right direction. They may not get to developed status tomorrow or 5 years or 10 years from now, but they will be players that you can look back on, I believe, and I'm not giving you investment advice, but I'm telling you what I'm doing. You will look back and say, that's what I should have gotten in on. But most people, they look at Singapore now and say, maybe we should move to Singapore. Maybe we should invest in Singapore. Singapore probably doesn't have a lot of stuff to invest in. If you want to buy a business in Singapore, the multiples are much higher than you'll pay in a Western country because they already have low taxes. It's already considered to be, stable, right? If you want to move there, it's going to cost you tens, if not hundreds of millions of dollars if you're going to move there as a passive investor. They don't need anybody else. They needed you 20 and 30 and 40 years ago. And so there are countries right now that you can invest in, and you can move part of your capital and have that capital be protected or at least diversified from the recession chances that you keep hearing about in the West. Now, let me add another angle. Not only could you participate in up-and-coming economies, and I'm not saying every single one of these economies will become fantastic. The same way not every stock in your portfolio is going to do fantastic. No matter you have the best intentions going in, some will underperform. And certainly I think that Asia, Southeast Asia, South Asia, those probably have higher chances. Some of the South American economies, the currencies are a little soft sometimes, probably have higher chances than some of these smaller Eastern European economies, okay? But realize every country has its place in the mix, and this is what Nomad Capitalist helps our clients figure out. People in Eastern Europe, you can hire at a lower price. Great English speakers, closer culture perhaps to what you might find hiring people in other parts of the world. That can be a good place to set up a back office, for example. Am I as excited about buying real estate in Romania for huge gains as I am in, let's say, India? Probably not. But Eastern Europe can still play a role, and we've done that in our company. And yet I'll go and put part of my portfolio in India, Indonesia. I think there are some African economies, sub-Saharan Africa, do have some potential. And so what if you could also diversify yourself, okay? Because what happens as Western economies get smaller? What happens is they have less money coming in. What's been the big story recently? The BRICS economies want to create their own currency. They want to be stronger together. Brazil and Argentina want to create their own currency. Non-Western economies are increasingly talking about banding together to make Western economies, and especially the United States, less relevant. What's that going to mean when the U.S. has less pull in the world economy? I'm not saying they're going to zero. Let's not be conspiratorial and crazy here, but they could have less influence. And success often happens in the margins. So if they have marginally less influence, marginally less money coming in, fewer trades are happening in dollars, they're going to have to rely on taking more of your money in taxes. And so wouldn't you want to say, hey, not only am I going to participate in an economy that's going to grow faster, that has lower chances of a recession, maybe they haven't had one in 3 decades, like in some of these frontier markets, but if I buy property in Turkey, I can get citizenship. Now I've got a second citizenship that I don't have to be whatever my current citizenship is if I don't want to be. Now I've got another passport to travel on. My government no longer controls me. You might say, hey, who wants to invest in Turkey with crazy inflation? Well, I won't say I'm a big investor in general in Turkey, but bought an apartment, and we've talked about how despite inflation, despite the currency going down, that property has gone up double digits every year since I have owned it. I could sell it today very easily. You can do that in Turkey. You've got other countries in Europe where you can, buy stuff, get a residence permit, buy stuff, get a citizenship. South Korea, for example, they are tightening up their residence by investment program, but you can get residence in South Korea. If you become a Turkish citizen, you don't have to live in Turkey. If you become a resident of South Korea by investment, you don't have to live in South Korea, but you have the option. And so many other countries do that, including some of the countries that have a higher chance of recession, right? I mean, you can invest in many Western European countries and get a residence permit. You can get citizenship through your family tree. But what if you could combine making an investment, opening a bank account even, right? If you look at a country like a Latvia, you can basically, put money into bank capital and get a residence permit. In other countries, buy real estate, get a residence permit, get a citizenship. So you're diversifying your currencies, right? Because there's talk about the U.S. currency may not be as strong in years to come. You're diversifying geographically so that you can escape some of the maybe more geographically isolated economic conditions. You're getting your money in something that maybe pays you a higher yield. The yields in many of these countries are higher. Look at, for example, Bahrain and the Gulf. You could easily earn 10% yields on simple real estate that you're earning 3 and 4% on somewhere else in the West. And you get a residence permit to boot. And you get a bank account to boot. And so you've got built-in asset protection, built-in diversification on the currency side with strength with the pegs of the US dollar. And you've got higher yields. And you've got potentially higher growth. And you've got an easier tax situation. Now that's not going to be a citizenship, but that's just one example of how you are getting something because that country wants to roll up the red carpet for you as the investor, but you're also escaping something. And so I believe that having multiple residences, multiple passports, bank accounts in different countries, holdings in different currencies isolates you from what you're increasingly hearing could be coming in the West. So you combine the two, and that's what Nomad Capitalist helps you do. We help people get dual citizenship. We have an entire real estate division. We research properties, and we have the contacts all over the world in markets that are often rather opaque. We help people get deals at the actual price, not the inflated foreigner prices. And we can help you then on top of that, get your residence, get your citizenship, get your banking, make an entire diversification package so that you are bulletproof against whatever happens in your country, not just the recession, but how are the politicians going to respond? Because look at what Barack Obama, for example, did where I'm from in the US. Look at what the other politicians in other countries do in the West. When recessions happen, you need to pay more tax. They come out and make it a political issue. So not only do you get hit by the recession, but then when your stuff starts to come back, when the economy recovers, you're now the bad guy. They want to raise your taxes. They want to point the finger at you. Wouldn't you rather be living in a country that rolls out the red carpet than one that points the finger at you? If you move some of your investments to places where they roll out the red carpet, you'll get the protection and the better conditions for yourself personally long term. And if I'm an investor, I want to invest for the long term, and I think these countries that are avoiding recessions are probably going to be great plays for the next half a century, just as the U.S. and Western economies have been the play for the last half century.